Today is Friday, July 17th. The Nasdaq and the S&P 500 both broke and closed below their 50-day moving averages this week. As a bull, you would have liked to see support, especially on a Friday. You would have liked to see these institutions come in and support the market at its 50-day, but that did not happen. DRAM and SOX that I highlighted as two key sectors in this market, both closed off of their lows today, but they are clearly below their 50-day moving averages and did not receive support at that level. So this could be a sign that institutions and retail investors aren't really just ready to support that 50-day moving average. Although it's not the end of the world, I would like to see eventual support and closes above this 50-day to be bullish. One stock that I thought acted great today is Dell. I did highlight it in last week's video. It was outperforming relatively, and it was holding up a lot better than the other names. And today it had a nice close at its highs on today, and it held its 50-day moving average. But one thing to note, it may just be a time to sit and wait. Earlier on in the year, we were trending nicely. Swing trades were working. We were in a trending market. Now that trend has broken. It might just be a time where we have to sit and wait for the market to consolidate and build a base. So then we're able to get better risk reward opportunities and entries into this market. So just looking at the SPY here, it did close below this 50-day. As I said, this is not the greatest news, but once again, it's not the end of the world. The Qs, however, are clearly below their 50-day. They did close off of the lows in the top 53% of its range today, but this is not the bounce that we really wanted to see. We wanted to see aggressive buying, especially on a Friday ending the week. That is not what we got. I'll just take a look at the SOX as well. We did close in the a higher percent, 82% of today's range, which is a better close, but once again, not the aggressive buying that we really wanted to see. DRAM had a bit of a better reversal today. It closed up 0.7% today. This is a better, a little bit more aggressive buying, but this is just not exactly what we're looking for. We want to see a clear sign that the bulls have stepped in and want to support these ETFs and stocks, but that is not what we have. Although, like I said, now is really not the time to be throwing money at the market. I did take a position in Dell today. I was watching it, stalking it, and I was watching the market in the beginning of the day. And if I pull up the intraday charts, I was watching the Qs as well as the SOX, but I was looking for strength here. I was looking for a bounce, and I was kind of waiting for us to get above today's open. As you can see, this level on the Qs. But if we go back to the SOX, same picture here. I was waiting to get back above this open. So as soon as I saw that we closed here, we came down and then we pushed into new high grounds and got above this open. And then we ended up closing here on a 5-minute. I was bullish for the day. I thought we were going to bounce for the day. So I put a position in Dell. And as you can see, it didn't have that big drop like the SOX and the Qs did. So it was already outperforming on the day. It was already a name that I liked. So as soon as we got this close above the open here, I put a position on Dell with a stop below today's low. And as you can see, I'm still in this trade. Although it's not a huge trade, this is one of the stocks that I played. I also did the same thing with MaxLinear with a stop below today's low. So I am playing this market very light. I do have a position in the TQQQ as well, and a small position in Soxel, which is a triple levered SOX. So I am trying to play this bounce a little bit. Obviously, it's not going to hurt me if the stocks reverse, which I do think they're very likely to reverse. I just want a little bit of money in the market to where if this bounce does work going into next week, I can add to these positions and make them full size positions. So, like I said, now's not really the best environment to be playing in, but I do think that these trades might end up working. If they do, good. I have a nice low cost basis in these positions. I do believe as a day trader that you have to adapt to the current market environment. And like I said in last week's video, as soon as we break this nice trend in the indexes, on a daily, weekly chart, I like to grab my bias from longer time frames, and then I dig deeper into the shorter time frames to confirm my bias and look for entries. But whenever we have an environment change like this, what I do specifically for day trades is, let's just say during this environment, right? I'm taking intraday day trades on the 1 minute, on the 5 minute. I'm trading breakouts. I have a long-term bullish bias. I'm looking for longs mostly, although I do go long and short during the day. But during trendy environments, I'll be looking to buy breakouts, sell into more strength. But I like playing breakouts whenever the market is in a bullish uptrend. But as soon as we got into this environment, I switched my trading strategy to more buying support, selling breakouts, or even shorting breakouts whenever I have a clear bias to the downside. So I just want to say that it's helpful to build your bias on the higher time frames and have a sort of idea of where you think the market's going to go, and then trade that bias. Obviously, if you're wrong, if you're bearish for the day and everything starts ripping, Trump tweets and the market starts ripping, you obviously have to change your bias and trade accordingly. But it's helpful to have a long-term bias about the general market environment and the general market trend. If we're in this choppy environment, like I said, I'm most likely not going to be trading breakouts. I'll be trading support and resistance, revert to the mean, and on those excessively bullish days, maybe I'll buy the pullbacks instead of buying the breakouts, because I know that once we get into this choppy environment, while yes, there is a lot of volatility and opportunity, it is very dangerous and you can get chopped up pretty quick. So it's just good to know the general market environment and trade your strategy based off of that. So looking into next week, some things that I would like to happen if I wanted to go long a lot of stocks is, obviously I would like to see support at this 50-day, closing above the 50-day, breaking into new highs for the S&P as well as the NASDAQ. I would want to see some surefire bounces, and I would like to see these indexes close above their 50-day moving averages, as well as the SOX and DRAM. I would like to see support there, and especially on something like DRAM, if I want to play SanDisk, if I want to play Micron, if I want to buy SK Hynix, I want to make sure that either one, I'm buying the leader, the one that's showing the most relative strength, or two, and also I want the general ETF that includes all of them, like DRAM, to be closing above the 50. Because even if I'm still bearish, you could expect a bounce up to the 50-day. And there's a lot of bears that'll short at that 50-day moving average. So just because we bounce back to the 50-day doesn't mean we put in a bottom. So like I said, these bounces, they are good, but they don't really mean that this is a bottom. So for me to be buying, a lot of the Marvells, the ARMs, the Dells, the AMDs, NVIDIAs, if I wanted to be buying those individual stocks, I would want them to show relative strength, outperformance, and I would also want the indexes or the broader ETFs to also show that they can close above the 50-day and they can make new highs.